Our next speakers are Weihao Choo and Dennis Tay. I'll introduce the speakers to you. Weihao Choo leads the P&C consulting team at Munich Re, which develops and provides solutions to reinsurance clients across Asia. The consulting team comprises of actuaries and data scientists and works closely with underwriters, natural catastrophe experts, IT, and other specialists. Weihao started his career in a primary insurer in Singapore before joining a consultancy in Sydney. When Weihao joined Munich Re back in Singapore in 2017, he was initially the head of enterprise risk management for the APAC MEA region. Weihao subsequently took on the lead of consulting role in 2019. Weihao is assisted by Dennis Tay. Dennis is a senior manager in the P&C consulting team at Munich Re, where he leads strategic growth initiatives in partnership with reinsurance clients by delivering digital and analytics solutions across the insurance value chain. Prior to joining Munich Re, Dennis was an actuary at a global insurer in London, where he was responsible for steering international portfolios of personal and commercial lines of business. Dennis later joined Munich Re in 2020 after completing an MBA at the University of Oxford. These two speakers, in the next half hour, they're going to answer a question. The question is, why and how should actuaries contribute to sustainability? Ladies and gentlemen, please join me in welcoming Weihao Choo and Dennis Tay. Over to you.
Thank you very much, Andreas, and thank you everyone for joining this conference today. I'll make a start first, and midway through I'll hand it over to Dennis. As Andreas mentioned, today we try to explain this question actually from our personal journeys, particularly in the recent few years, whereby we have been driving a lot of initiatives, of course, as part of our daily jobs, but we realize that actually a lot of what we do is related to sustainability. And of course, then that made us actually have the view that we as actuaries should contribute to this very important topic. So I'll start off with why us. And well, I'm going to go through a few facts about climate change, which a lot of us should be already aware of. But first of all, we all know that climate change involves very long-term projections. So we are talking not just decades, but centuries ahead of us. There is a lot of modeling involved. And once we talk about long-term modeling, that kind of makes us think about what we do anyway as actuaries, like particularly in the life insurance space. So that's one. Climate change involves long-term projections. And of course, as we know very well, it leads to a high degree of uncertainty. And there you see a few charts. Let's not go into the details, but you can see that there's a big range in forecasts. Beyond the next few years, there is an increasing degree of uncertainty. And again, we as actuaries are very much used to dealing with uncertainty. So that's the second reason why we as actuaries should be interested in this topic. The third reason is no surprise. Climate change isn't just about the science, isn't just about the science behind natural perils. We need to think about the impacts on us as human beings, as countries, as an economy, or as a world. And therefore, beyond the natural perils, part of climate change, we need to think about the impacts on economic activity, what it means for different industries, what it means for growth, what it means for developed versus emerging countries. And of course, as we get deeper and deeper into the topic, we need to link it back to our business. We are, most of us as actuaries are in the business of insurance, and where I work, which is in the P&C sector, of course, then we start to think about the obvious ones, such as the physical damage caused by natural catastrophes, but also not forgetting the secondary effects. So with the liability risk, the transition risk, we need to think about what is the current state of the regulation in different countries. And we have seen different countries introducing regulations, not just to tackle climate change, but also insurance-related regulations. So, the most recent one is, for example, the cyclone Choo in Australia, and that is something which very much is linked to climate change. The softer part of it, which is a bit more difficult to quantify, is the social trends. And of course, as human beings, we react to these changes. But if you think about this whole topic, it is about bringing together knowledge domains. And I would say that actuaries are well suited to do this because we have a broad range of knowledge of the insurance sector, the financial sector, social trends, and again, why not us to be involved in this very important topic. The other reason which I think is important for us as actuaries to be involved in climate change is that effective communication is key. And I'm sure a lot of you would have Googled for climate change, for example, and I would be struck by the dominance of scientific knowledge, and I personally find it very difficult to digest. I must admit, I'm not a climate scientist, and when I read the reports, for example, by IPCC, I found it very difficult to understand because it was very scientific, very statistical, and as a member of the business community, I want to know what is the impact on us actually as a business or as a community. And I must say that then the actuary needs to step in and really effectively communicate the so what. I like to use the example which you see there, the typical bell shape, the bell curve. And here the x-axis represents average temperatures. Again, let's just assume that climate change leads to a small shift, a small increase in average temperatures. The way we communicate to a lot of our stakeholders is that you might wonder how that small shift leads to a large increase in the frequency of extreme weather events. And this graph shows it very well. So the shift in the bell curve is rather small, but you can see that the area beyond a certain threshold increases many times. And that itself illustrates to many of our stakeholders that you might think that it's half a degree or 1 degree increase in temperatures, but that actually leads to a lot more extreme events. So again, it's all about communication. The next reason, so we need to manage multiple stakeholders whenever we talk about climate change action. And this is simply a case study. By no means this represents all the activities which are happening. But there is, some of you may be aware that there is this recent, not so recent now, this cyclone reinsurance pool in Australia. And one of the triggers for it was the affordability topic. So certain regions of Australia, they have such high frequency of these events that the insurance cost becomes unaffordable. And the government had to, for example, step in and set up this pool. And not going into the details of the pool and all the complexities, there are many stakeholders to be managed. That's for sure. And it's the government, it's the various regulators. So not just the prudential regulator, but say the consumer related regulator, there were all the the affected customers and the media. Of course, the media features very strongly in Australia. We talk about how we deal with reinsurance. Certainly, Munich Re is very active in Australia, so we are very much involved in this topic as well. It becomes, the list grows, right? So depending on where you sit in this whole chain, you might even have to consider the underwriters, the pricing actuaries. What does it mean for the insurance contracts? There is the IT element as well, because you are effectively changing to a different reinsurer. So the list goes on, and it just shows the complexities which we need to address when we talk about climate change. And so I must say again that actuaries are well suited to doing this. We do not just do projections. We need to understand the impact of our work on all the various stakeholders. So to recap, climate change involves long-term projections. It involves a high degree of uncertainty. There are multiple knowledge domains which need to be brought together. There is the communication element part of it, and last but not least, the stakeholder management, and that's really us. Just in case you're curious where this photo came from, it came from the recent ICA in Sydney, and that's really us as actuaries. I'll hand it over to Dennis, who will then talk about how actuaries can make an impact.
Yeah. All right. Thanks, everyone. So I'll go into how, and again, as Weihao mentioned earlier, this is a bit more of a reflection of our personal experiences. Again, we work at a company that is very much involved in these topics. We are actuaries as well, so it's quite natural that we try to view or try and share our experiences. I think it will overlap quite significantly with many of you. But of course, again, the work that we do in the companies that we operate in, etc., will always shape the way that we view our involvement. So hopefully this is a section that kind of resonates in different ways with different groups of attendees, and then kind of inspire different things that we might want to do or where we can see ourselves going forward. So as always, we say a lot, everyone here says it a lot, but I think that is the truth. Actuaries can make an impact in many ways. Weihao went through many in the context of a specific situation or specific setup with the reinsurance pool in Australia. But I'll go through a couple more here in a bit of a general sense. The nature of actuarial competencies is that it's always very applicable in many situations as long as you find the right ways to do it. So quite straightforward. Something that is maybe the closest to most of us is analysis and quantification, right? Quantifying the impact of climate change on an insurable risk, whether by way of CAT models, whether by way of applying judgment, whether by exploring multiple scenarios or multiple projections, which are quite standard and exist in the market, and trying to consolidate that into a single view and that can be communicated to various stakeholders. Again, stakeholder management is something that we are quite naturally capable of doing, or something that's very core to the actual competency. Weihao mentioned a number of stakeholders that we have to look at, or that we anyway can support and we should support. The material is always very dense, just like actuarial material, but thankfully we're all taught or we're all trained in the way of making that understandable. And of course, there's no reason that something so scientific and something so impactful is not something that is outside of the realm of our ability to communicate in an understandable manner. Something quite exciting for us, and particularly one of the very exciting things that we do over here, supporting new products that tackle climate change, is whether it is talking about longer term assets, whether it's talking about projections or estimations of the exposures, hazards, severity to specific perils that are influenced by climate change, to stakeholders, whether it's to our clients, whether it's to brokers, whether it's to the market, or whether even to management, right? So that we have a better understanding of how products should evolve, or how products should come in at the right times to support to ensure that adequate protection continues to be available. We're always good at bringing people together. Again, actuaries are very comfortably at the intersection of many stakeholders. No reason that this doesn't extend here as well. Helping to address regulation. Some of us are much more in tune with regulation reporting requirements. There are always discussions about quantification of climate impacts on the balance sheet, on the insurance balance sheet, or even on financial balance sheets as a whole. Again, something very much relevant to us. And finally, just as we do here in the forum, but of course, many of us speak on many stages, and we are often sought after as experts on specific topics. Climate change, again, naturally being one of them when it comes to the insurance space or the investment asset space. And really, it's up to us to be able to give an opinion that makes sense. Now, we get a bit more into my journey, and I think this reflects a bit the experiences of many people here as well. Started as an actuary, as Andreas mentioned in the introduction, very much traditional pricing actuary. Moving on to data analytics, again, something very familiar. Some of us started with data analytics instead, but again, very much now pushing the boundaries of what we talk about in insurance, whether it's free text analysis, whether it's geocoding, enriching data, etc., etc. Many of us have that experience. And now where we are, quite excitedly, is that, as I mentioned before, we are looking at things like new insurance products that will make sense, whether addressing the protection gap in specific markets becomes so much more imperative. Again, you talk about increased rainfall, right? Communities that were already vulnerable, typically also quite heavily exposed to natural hazards. These only will get worse with climate change, or more extreme. And necessarily the impetus, the imperative to address these gaps is increasing quite significantly. And finally, something that is quite interesting for all of us, I think, is climate analytics, right? So we are not the climate scientists of the world. Some of us might be, but it's really how do we distill, extract, incorporate the analysis, the scenarios, the projections, the uncertainty into our everyday work, and ensure this is digestible to our many stakeholders. So these are kind of things that I am working on, we are working on, quite as a big part of our everyday jobs, which I think is quite interesting and very much hopefully a bit of a case study for everyone on what on how actuaries can fit in and are already fitting in the sustainability climate change topic. The remaining section of this is split into two sort of sections. One is on, okay, so it sounds kind of interesting that we've done a bunch of different things, or we are doing a bunch of different things as well, but how do we go about it, right? And of course, there's the learning part, and then there's the application part. So when it comes to the section on learning, no surprise, we do have to, unfortunately, digest some of these very dense materials that Weihao mentioned before. We do need to understand the science at the right level to be able to communicate about them. We need to be more exposed, or we need to expose ourselves to industries, whether we insure them or not. But things like photovoltaic cells, things like alternative energy sources, to understand the developments in those industries. Even we talk about electric vehicles, the different types of batteries and etc. To know enough about them to understand how climate change and the impacts of such would be relevant. We need to be up to date on regulation. We don't need to be legal experts, but we do need to be quite aware and quite on top of these, of any developments or any potential developments in the future. Usually there's quite a bit of a runway for us to work with. Whether we want to or not, we do need to expose ourselves to the many opinions out there, some a bit more extreme than others, but these are all valid, right? We need to be quite in tune with the general opinions, the extreme opinions as well, on climate change, on the impacts, on the realms in which it is applicable or it is relevant. And only then can we be more credible in being able to identify what sort of messages, what sort of concerns, whether governments have, shareholders have, our own management, or even the communities that our companies insure, if we're insurance companies, right? And finally, I think we learn a lot from work. I think many of us, if we are, whether it's in insurance or investment or any sort of space that actuaries operate, natural catastrophe, weather events, etc. These are all very much happening or being discussed or being developed in many parts of the workplace. We're quite lucky that in a place like Munich, for example, we of course have a huge network of experts in this area to learn from. And then from there, we are then in a better position to see how we can fit in or in what ways we can contribute to the topic. Something that also takes a bit more active effort as well is to think about what our customers or what our segments or what our usual areas of operations are, and in the context then of sustainability, climate change, and these sort of topics, right? So non-life insurance, a more personal example for myself, we think about, well, how does sustainability affect our customers and all the products and segments that we look at? Well, for motor vehicles, of course, I already gave it away. Electric vehicles are a huge topic right now as a way to support the global sustainability agenda. But of course, then, right, we need to go into very traditional actuarial discussions on pricing, on coverages, and etc. And again, that's where we do need to be quite aware. We do need to learn and stay up to date on the developments in this area. Only then can we contribute meaningfully to this to discussions on the topic. When we talk about SMEs, I think we're all very familiar with package insurance, property and liability packaged together, or property all risks, or something like that. Quite a challenging segment in many ways, but very important given the percentage of economic activity and populations that sit within this area. But then, of course, we think a bit further or think a bit wider in the context of addressing protection gaps and supporting vulnerable groups. Well, then, have we looked enough at, do we understand enough the needs of the uninsured? And again, what I mentioned earlier, the groups that are the most vulnerable to some of these natural perils, just by virtue of the resilience they have, whether physical or financial. And then again, what can we do to address the needs of that segment? And then we talk about large corporates. Okay, usually think corporations that are a bit more insulated from some of these changes. But then we also need to think then to also companies that are big, maybe only by valuation at this moment, but emerging technologies that are being supported by large corporates or being embedded into large corporate operations of large corporates, how startups and etc. are either in need of some sort of a protection, or how are they changing the type of risks, the type of considerations that maybe our most traditional customer segment are exposed to. And then, having not saying that it's kind of separate between learning and application, but of course, having learned all of that, or being quite aware of the learning that's required of us in order to have a credible opinion or a value-adding position as actuaries in this space, then it's about application, right? So how do we communicate things like all the various projections that we talked about before? For emissions, the uncertainty margins are massive. This is not something that is foreign to us as actuaries. It's one we need to be able to apply these various projections and look at the impacts, but also then how do we communicate them? Say in the context of stress tests, right? So what is the impact of these changes on required insurance premium and its affordability? What do we expect on the claim side moving forward? Is it adequate to renew as is, or do we need to start looking at these projections and start to think about how we talk about technical premium? Is it technical premium at this moment, or is it a climate projected or climate expected technical premium or expected loss? Many other topics you see over there, all quite related to stress tests. But again, here it's trying to take all this science, all this uncertainty, and all these things that people try to avoid sometimes because it's difficult to digest, and making it directly relevant to our business or our operations, right? And then it creates a dialogue, it creates the imperative to move forward in these areas. I mentioned very briefly in the data analytics part of my journey before, we talk a lot about enriching our existing data. And now, we enrich it with things like company statistics, company financials, to understand a little bit better the risks that we are underwriting or the risks that we are pricing. We incorporate external data on elevation of a building. Are we on the 5th floor or the 2nd floor? Is the 5th floor exposed to flood the same as the 2nd floor, etc., right? But now we have the opportunity, or there are many opportunities to incorporate climate projected data or climate risk data into our regular analysis. So you see over here a map from Munich Re's proprietary solution on net cat hazard analysis and scoring. We can look for any location. Okay, what happens, or how do we incorporate all these additional hazard data and information into our analysis? And then, of course, then what is the actual impact, or what's the impact that needs to be communicated out to our stakeholders? We talked a little bit about new products before as well. So given, we think about the customer or the needs of the customers a bit differently, how then do we conceptualize, create price, and get approval as well? Quite often, many of the times, regulatory approval is not the easiest thing around for new products, but we do have to address those issues, right? So how we think about new products that address new technologies, whether it's in green energy, electric vehicles, etc. And finally, for those who work more in the investment and the capital space, then of course, how then do ESG scores, whether it's or ESG ratings impact how we need to look at things, or how our stakeholders need to look at the business that we write, the analysis that we perform, and etc. And then just to wrap up on one last slide, I pass back to Weihao.
So last slide here. So really a summary, and here I quote from ChatGPT, a summary to the question on how actuaries can address or help address climate change. A fun fact, so ChatGPT initially gave a very long answer. I had to shorten it, so I asked ChatGPT again, can you please shorten it? And this is what came out. I further refined it, so but you can see that it's very similar to what we would think. It's risk assessment and modeling, it's product development. This carbon pricing and financial analysis is interesting, and I'm sure not many of us are in this space, but definitely a lot of us have a financial background and we can contribute to this topic. It's around climate-related liabilities. So I guess that's insurance liabilities, reserving valuation. That's what we do. Stress testing, scenario analysis, okay. And last but not least, collaborating with policymakers and regulators. So yes, it's really us. Let's leverage on our risk management skills, our financial modeling skills, to help our clients, employers, and organizations better understand and manage climate-related risks. Thank you very much.
Thank you, Weihao and Dennis. Fascinating presentation. Again, this presentation is highlighting how the many bits and pieces are coming together and how they interact with each other. Are there any questions from the audience? You can type your questions in the Q&A box at the bottom. I have one question for our speakers. The two of you are obviously working for a company that has lots of in-house meteorologists, in-house climatologists. Some people in the audience may be working for smaller companies that don't have an in-house climate or climatology department. How would the role of an actuary change working for one of those smaller companies? What is your advice to those colleagues in the audience?
Sure, thanks for the question, Andreas. My take is that it doesn't necessarily need to be sophisticated or advanced or precise. I mean, it's no point talking about precision in climate change. even raising that awareness is already very helpful, and illustrating how changes in assumptions could impact whether we meet the business plan or not. So it doesn't need to be sophisticated, and the first step really is to raise awareness, and for that, I don't think sophistication is required. So even if we are working in a smaller setup, or if we have a role which is not so much related to climate change, definitely is worth to start thinking already how we can incorporate this topic into our work.
Right. One slide in your presentation highlighted how the various stakeholders need to be managed and how the actuary needs to talk to the various stakeholders. I guess actuaries aren't the only profession doing that. In your company, I suppose the climatologists are doing the same. The chief underwriting officer, I'm sure, is doing the same. Do the actuaries have a voice generally? Is the voice of the actuary, is the opinion of the actuary being heard? That's my question.
Yeah, sure. And I can take this very briefly, and Dennis can add. Of course, we all have different personalities and different takes on what the actuaries should be doing. But certainly, my view is that if you speak to a climate scientist, and they are very much focused on the science, if you talk to the chief underwriting officer, they focus on the risk assessment. But I would say that we as actuaries would bring a more holistic view to the table. So we might say, okay, let's gather all the opinions and look at the big picture. So I think actuaries are good at that, bringing pieces together and thinking more holistically. What is the impacts on consumers, on insurers, on regulators, and all of those?
Yeah. And I'll echo that, but also add to a little bit, which is that if we, climate change and of course the impacts on insurance and assets and etc. It feels like a new topic. But the reality is, if we look at just natural catastrophes or weather events as a whole, right? Whether we talk about hailstorms, whether we talk about excessive precipitation, flooding, etc., very climate impacted perils, there is anyway the voice of the actuary already. Now, if we look along that lens or along that vein, then of course the impact of climate change is just then also an extension of the topic, and that's where the learning also comes into play. I don't think any of us actuaries here are granted a seat at all the tables that we want, but we do earn it, and many of us have to find a way and build that credibility or build that awareness with other stakeholders that we are able to contribute, right? And again, here, the leap or the transition or the extension from traditional, let's say, very specifically natural catastrophe business, right? You anyway have climate scientists, you have NatCat modelers, you have underwriters, but there is also the actuary that sits there already naturally incorporating the AALs, the uncertainties, looking at the accidents probabilities. And now those just need to then evolve to incorporate, let's say, climate projections, right? What is your expected loss on flooding in the next year or the next 20 years in these scenarios, right? And then how do you reflect that in the standard dashboard or the enhanced dashboard or report for the important stakeholders? And again, then you learn, you build that rapport, you build the credibility, and then there's no question that the right actuary or the one that is keeping up to date is very much deserving a seat at the table.
Thank you for that. I think important to add is that we actuaries, we are well positioned to keep that, to have that bird's eye view, and to keep that bird's eye view. And I was once asked by a layperson, what is the role of an actuary in an insurance company? And I answered, the actuary sees into every department except HR. And if we try to keep that bird's eye view, even though it's getting more complex now with climate change, but if we try to stay on top, stay abreast, and keep that bird's eye view and try to continue to look into every department, even though, as Dennis said, we may not be invited to every table that we want to or should be. But as an actuarial profession, we should probably try to keep that advantage and continue to provide the bird's eye view to our employers.